Hi, this is Lee Gray, and in the next 2 or 3 minutes or so, I'm going to give you an overview of the trading system and of the software that I've written so far. And please keep in mind that the software has been written purely for my own testing at this point, so please don't judge it too harshly. This is a trading system that changes the trading game. Trading, as everyone knows, depends on predicting the future price and essentially placing a bet. If you're right, you make money. That is, if you take profits instead of letting a winner turn into a loser. So you have to know when to get out. And if you're wrong, then your stop gets taken out and you lock in a loss. Sometimes you get stopped out and then you actually then see that your prediction was right, and it goes up without you on board. So this system changes everything. You don't predict future prices, you don't place stops, and you don't take losses. Simply put, you lock in gains as the market fluctuates. It works in bull markets, in bear markets, and in chop. You're no longer hunting for the next Apple or Google or whatever your idea of the ultimate stock is. Because that's like looking for a needle in a haystack. Instead, you can use mediocre stocks and do very well here. Basically, what you're looking for is fluctuations. You get paid not for the change in price from the low to the high. You actually get paid for the length of the path that the stock traverses. So you'll see on my the images on my Rocket Hub that I've actually traced out the ups and downs of some stock that's fluctuating. And it's the length of that path, the ups and downs, that you get paid for. It's not about the destination, it's about that journey. You never take a loss. You only sell when there's a gain. And as they say, no one ever went broke taking a profit. So this way, you're never going to go broke because you're taking profits. You're not taking losses. And you no longer search for home runs. You just hit singles over and over and over. And imagine this, over time, what would your trading look like if you never had a loss? So here's an example. I just sort of randomly picked this SSW because I heard a trader on one of the talking head shows recommended SSW. He said he thought it was going to go up. So here's a bunch of trades. Each one of these is a trade, and so if I just pick one at random, it was sold at 17.50. It was bought at 17, and that one was held for 8 days. I'll pick another one at random. Sold at 16.50, bought at 16, and this one was held a long time. So you can actually get some tax benefits because of long-term holds. You basically do LIFO, I guess it is, last in, first out. So the things that you bought longest ago end up being the last things you sell, and therefore you can work towards getting capital gains rather than short-term profits. So here's what the chart looks like, and the green dots are buys and the red dots are sells, and you can see that we're trading quantities of 62 in this particular scenario. So every time the stock moves a little bit, we capture a little gain, and every time it drops some, then we buy at a better price. And that's basically the system. You can see the share quantities have changed over time. How much we're actually holding will vary with the price, of course. And then here are percentages. I'm not going to get real deep on this because I don't want the video to be too long, but so for example, this is essentially for all of 2011 and what we've been through so far of 2012. Today is May 16th. So you can see that the realized profits as a percent of the reserve, which is terminology that I'm not going to get into right now, but this is a profit of 26%. The paper profit is over 50% over that period of time. And then here are the actual profits in dollars. And then finally, I am keeping track of the share price, the buys and the sells, the average buy and average sell, and the average difference between them. So at this point, the average difference is 67 cents between the average buy and the average sell. And then these are the big ugly tables that were all the data from the graphs came from there. So that's it. I don't want to go any longer on this introductory video, but I hope that answers some questions for you. Thanks.